So the question is, how much does it cost to sell your home? And this really depends on a ton of different factors. Hi, Vincent Chan here, and in today's video, we're going over what are the common costs associated with selling your home. And these things could surprise you. And if that sounds good, make sure you smash the subscribe button and ring the notification bell to always get the latest and greatest from The Simple Dollar. And as always, you can always visit thesimpledollar.com for this content and a lot more. While every home sale is different and unique and laws and customs could vary by states, typically a home sale will involve the same types of costs and fees pretty much just anywhere. Generally speaking, the more expensive the home is, then proportionally they'd be paying a higher cost of any associated fees and expenses. Other factors that you need to take into account when you're selling your home is going to be your neighborhood expenses, any repair costs, your property taxes, and even the time of year that you're selling. So it is very crucial that you pay attention to the next couple of sections in this video so you're not caught off guard. The first common expense is any real estate commissions. And this is a pretty big one. Typically, a seller of a home can expect to pay around 6% of their final home sales price in the form of real estate commissions. And that percentage is typically split up between the buyer and the seller's agent. That means if the sale price of your home is $300,000, that means 6% of that would cost you $18,000 that would be given to the real estate agent in the form of commissions. Obviously, since this fee is relatively high, then you might want to actually be encouraged to try to negotiate this fee down. And it is pretty common now. On a recent study, they found that around 60% of home sellers actually negotiated or discounted the actual commission that the real estate agent would take from the final home price. There are a couple of reasons that real estate agents could decrease the amount of commission that they take. The first reason could just be supply. There aren't as much houses as there are real estate agents, and everyone is trying to fiercely compete to try to help people sell their limited homes. Number two is the introduction of online real estate brokerage platforms, as well as people going and favoring local agents over the traditional realtors in the area. Alternatively, you can just sell the home by yourself. If you're living in an area with a lot of traffic, then just putting up a sign up in front of your yard might be able to do the trick. Otherwise, you can just post for free on sites such as Craigslist. However, you need to keep in mind that if you don't hire a real estate agent, then you have to do a lot of the heavy lifting work, which could include one, actually hiring a lawyer to draft up the contract, number two, actually negotiating the deal itself, and number three, any paperwork, such as any title paperwork that the real estate agent typically does. The second most common cost is any home repairs. And if you are in a fortunate enough situation where your house is in a perfect pristine condition, then you might not have to worry about this. However, if you do want to increase your curb appeal, then you might have some money that you want to spend in improving and enhance the actual interiors or exteriors of your home, such as putting on a new fresh coat of paint or fix the loose railing that you have on your staircase. However, you do want to keep in mind that in addition to any pre-sale home repairs or improvements that you do to your home, you still might need to reserve some money to pay for repairs during the sale process, because typically the buyer will hire a home inspector, and the home inspector might identify some cracks or some leaks or some faults with your infrastructure, which you might have to pay out of your own pocket to remediate the situation. The next most common cost is paying off any mortgage payments. And you might be thinking, oh, whatever money that you get from this home, you'll just pay off whatever mortgage is remaining on the last month's statement. However, it's not so cut and dry. The actual amount that you end up paying might not be the exact same amount as the last month's statement because of interest, which accrues daily. So you might have to pay on top of your principal any additional prorated interest accrual until the date of closing your home sale. And you also want to double check if your mortgage has any prepayment penalty. Although most don't, you do want to take this into account and factor this in if your mortgage payment does. The next common cost is any neighborhood fees or associated taxes. If you live in a neighborhood with a homeowners association, then you might have to pay off the remaining prorated rate of your monthly or annual HOA fee. On the flip side, if you already paid off the total annual fee for your HOA fee, then you might be returned the prorated amount up until your closing. And other fees can also vary. For example, one fee that varies by state is actually paying an additional tax in order to transfer the title. In addition, if you actually get a good amount of income from your home sale, then you might have to pay some capital tax gains on the actual income that you receive. But if your home sales nets a profit that's less than the amount defined by the IRS that would allow a capital tax gain, then you might be able to keep your profits tax-free. Under certain conditions, For example, if you lived in your home for at least 2 years out of the past 5 years. The next most common cost is property taxes. Depending on a couple of conditions, you might have to pay extra in order to bring your property taxes up to date for your buyer. If you just paid your property tax bill, then you might owe up to nothing. However, if your tax bill is actually way far away, then you might have to pay a couple of thousands in expenses, and this is something you definitely want to factor in. The next common cost is title insurance, and this is used to protect the buyer in case there are any ownership issues or any issues involved with the title of the home. And this is typically purchased by the buyer, but in certain occasions, the seller might actually have to pay for title insurance. Title insurance typically costs $500 to $1,000, and in addition, if there are any identified liens on your home, then you might need to also pay for that before you can successfully sell your home. The next most common cost is any home warranty, and while this might be optional, this might sweeten the deal for the buyer and convince them to actually pull the trigger. And while the terms for home warranties do vary, typically they do cover the main components of the home in case they need to be repaired or replaced for the buyer. The cost of a home warranty is really dependent on the actual home. However, typically you can expect to pay $300 to $500 for home warranties. And the final cost is the buyer's closing cost. In a buyer's market, then a seller might offer to actually pay for the buyer's closing cost in order to sweeten the deal. Usually the buyer's closing cost is about 2 to 5% of the actual home sales price and includes stuff such as mortgage fees or appraisal fees or any other professional service that are involved with the buyer's closing cost. So you definitely want to be aware of all these costs that could be associated with you when you try to sell your home, because the better prepared you are, the more money you can actually save within your own pockets. As always, thank you so much for watching. If you have any questions, feel free to leave a comment down below and we'll get back to you as quickly as possible. And remember, to always get the latest and greatest content from the Simple Dollars YouTube channel, remember to smash the subscribe button and ring notification bell, as well as visiting thesimpledollar.com.